In the early 17th century, a new kind of beauty captivated the Netherlands, not a work of art, but a single, delicate flower with petals so unique they seemed painted by a master. This flower, the tulip, would soon spark a speculative frenzy so intense it would become the subject of legends and the source of a catastrophic financial crash. Welcome to Economic Epochs. Today we're journeying back to the Dutch Golden Age to explore the bizarre story of the Tulip Mania, a time when a single flower bulb became more valuable than a house and fortunes were won and lost in a day. Our story begins in a time of unprecedented prosperity for the Netherlands. By the 1630s, the Dutch Republic was a global powerhouse of trade and commerce. The East India Company was bringing in vast wealth, and a new, affluent merchant class had emerged. With newfound wealth and a taste for the exotic, the demand for luxury goods soared. Into this world arrived the tulip. Originally from the Ottoman Empire, the flower had been introduced to Europe in the late 16th century and quickly became a status symbol, but it was a genetic mutation, a virus known as the tulip-breaking virus, that truly set the stage for mania. This virus, harmless to humans, created stunning, one-of-a-kind color breaks in the petals, known as flames or feathers. A single bulb with these breathtaking patterns, like the legendary Semper Augustus, was an object of peerless beauty and rarity. The demand for these rare bulbs soon outstripped the supply, and a market for tulips emerged. At first, it was a legitimate market for horticulturalists and botanists. But as prices began to rise, a new kind of participant entered the scene, the speculator. These weren't gardeners, but merchants, artisans, and even chimney sweeps who saw a chance for easy wealth. The market became a self-fulfilling prophecy. As people saw their neighbors getting rich, they rushed to buy in, driving prices even higher. A single Semper Augustus bulb was sold for what was then the price of a grand Amsterdam house. A more common bulb, a viceroy, was famously traded for 8 fat pigs, 4 oxen, 12 sheep, 2 barrels of wine, 4 barrels of beer, and a mountain of butter, cheese, and clothes. The list goes on and on. The trade became so frantic that it moved from the physical to the paper. Traders met in taverns called colleges, where they would trade not the bulbs themselves, but a kind of options contract, a right to buy or sell a bulb at a certain price in the future. This allowed people to speculate with little to no capital, multiplying the frenzy 1,000-fold. For a time, the market seemed invincible. Prices continued to climb, and everyone was certain they were a genius. But the prices were detached from any rational value. The tulip, beautiful as it was just a flower. It wasn't a source of income, a productive asset, or a useful commodity. Its value was based on nothing but the belief that someone else would pay more for it tomorrow. In February 1637, the first cracks appeared. At a routine bulb auction, a buyer failed to show up. It was a minor event, but in a market built on pure confidence, it was a deadly signal. The trust was broken. That day, the price of tulip bulbs began to fall. Not a slow decline, but a catastrophic plunge. The panic was immediate. Everyone wanted to sell, but no one wanted to buy. The options contracts became worthless. People who had mortgaged their lives to buy a single bulb found themselves destitute. The government, initially hesitant to intervene in the free market, found itself in a legal and financial quagmire. People had made verbal contracts in taverns with no legal backing. There was no one to enforce payment, and the economy was thrown into chaos. In the end, the government declared all tulip contracts null and void, offering a paltry sum to settle the debts. The market collapsed entirely, and thousands of fortunes were wiped out. The tulip mania is more than just a historical curiosity. It's a powerful lesson in behavioral economics and the irrationality of crowds. It stands as a profound reminder that when prices are untethered from fundamental value, the market becomes a dangerous house of cards. The lessons learned from a simple flower in 17th century Holland are just as relevant today as we navigate the manias of technology and cryptocurrency. And as with all economic epochs, the story of the tulip reminds us that in the end, it's not the asset that matters, but the human confidence behind it.